Hello, everyone, and welcome back to another episode of WagMe TV. Lots of institutional news this week, so today we're going to be covering some of the biggest updates with exchanges and market makers that could have some serious implications on the crypto markets. So we're going to kick it off with some of the latest Binance news. I'll throw it over to Garcia to get us started.
Yeah, absolutely. So really quick on Binance, not too much, but just a quick update. So they actually halted withdrawals a few days ago, and it was for the second time in a 12-hour span. And Binance was citing the reason for that was large volume of pending transactions. But again, I don't know how realistic that is or how true that is. So I think there's a lot of speculation on Twitter as to why they actually halted withdrawals. But it also sent the transaction fees and Bitcoin network fees up through the roof. I think we looked at a couple of charts earlier, but they're back up to, at least briefly, we're back up to close to 2021 network fee levels. So that was kind of what happened with Binance. I think there's just something to keep an eye on there. We don't really know what's going on, but again, we've seen what's happened to reputable exchanges in the past. So it's going to be interesting to see what happens next for Binance. But
And I think part of that had to do right with the network gas fees around Bitcoin, right? I think they basically had set fees that they didn't account for the surge in a lot of the Bitcoin network fees. And so again, I think you nailed it on the head, right? We have to just be as careful as possible when we're working with exchanges, and we've said it for a long time. Like, if you can get as much off of exchanges as possible, because if it's not your keys, it's not your crypto. So keep an eye on that as we keep going through this.
absolutely. If you take anything away from what we just ran through, it's not your keys, not your crypto. Like if it's on an exchange, that thing can go to zero at any moment. It's not technically yours unless it's in your wallet. So great call out there, Mata. The other thing that happened in the exchange, exchange world of crypto was Bittrex actually filed for bankruptcy. So what happened here was essentially a few weeks ago, the SEC accused the exchange of bringing in $1.3 billion in illicit revenue between 2020 or between 2017 and 2022. So they had that issue, and then they ended up filing Chapter 11 just a couple weeks after that. So one of the main issues with this was after the SEC called Bittrex out essentially and saying that they had that illicit revenue, they then communicated to all their customers that their money was safe. And clearly that wasn't the case. So they're filing for Chapter 11 bankruptcy, and they essentially don't have any cash on hand is kind of what they're saying. So this is what they actually filed on May 8th. And so they have over 100,000 people that they owe money to, and between 500 million and a billion in terms of actual creditor funding that they owe these folks. So it's going to be interesting to see how this kind of pans out and how it affects the market, on a wider base. But at the same time, it seems like Bittrex is pretty much done. And again, that's a top 100 exchange, $5 to $10 million in 24-hour volume on a typical day. And so not the biggest exchange, but also not the smallest, right? So definitely interesting to see that kind of hit the crap hit the fan essentially.
Yeah, and sticking on the topic of regulation and the impact that it's having. Clearly, we see the SEC really does have they're swinging a big bat, and so if they're coming after you, similar to how they come after Bittrex, that's no small thing. And what we've seen here, moving more to the market maker side, and this is pretty big news across the institutional space. But Garcia, if you want to pull up the article, basically we had news breaking today that both Jane Street and Jump Crypto, who are two of the biggest market makers in all of crypto, they do a lot of market making both on centralized exchanges as well as decentralized exchanges. Both of them are considering kind of pulling back on their crypto efforts. And this directly, they cite the basically the regulatory environment within the US for their primary reason for doing so. This is going to have potentially huge impacts on the crypto market. Now, obviously, there's a ton of market makers in crypto, but these are two of the biggest players. And if you have market makers leaving the system, leaving the ecosystem, and potentially leaving crypto entirely, this basically makes for the potential for more and more illiquid markets, which means more and more inefficient pricing and more price volatility. And so that's kind of my biggest takeaway from this, is like something to keep an eye out on. Maybe not immediately, but they're definitely signaling to the market that they're planning to pull back in kind of the crypto realm in terms of market making. So curious to get your guys' opinions on what you guys think of this latest development.
Yeah, I mean, I think I think we talked about it briefly in one of our last episodes, but Brian Armstrong talked briefly on Twitter a little bit about the threat of being so strict in the US and not necessarily so strict, but not having a roadmap or a plan for how you're going to regulate crypto in the United States, right? Because a lot of people are going to look elsewhere. They're going to look offshore. You can't build a business around crypto if you're not sure what the regulation environment's going to be, because you could just be, after raising a bunch of money and after coming with a business plan, you could be hit with something that totally destroys it. So I think it's going to be interesting to see where that capital goes, and if it ends up flowing away from the US, and if there's going to become another crypto capital, so to speak, in terms of a country.
Yeah, it almost, to kind of piggyback off of that, it almost seems like the US is in a way pushing them out. For what reason, we're still kind of trying to find out, right? But I mean, like you kind of mentioned, Sam, these are two of the biggest market makers in the crypto industry, right? Together, they held about 4.1 billion in crypto assets alone. So, I know they're maybe not necessarily going away, but they're obviously like heading away from the US and heading away from crypto specifically. So definitely not great for the space when we need basically more inflow, more money, more institutions, more, I guess in that case, like regulation, right? And just really a transparency and understanding of what that looks like. I don't think this looks very good for the US specifically, and kind of pushing that forward and technological advancements and what have you. And it's definitely not the best news, right, coming across our desks. It's just interesting that it's coinciding, to Zia's point, with a lot of these other things, with Coinbase trying to leave the US and a lot of the regulation pieces happening where the XRP suit still isn't, settled, things like that. So definitely not great to hear. And you have to wonder, is this going to kind of drive a little bit more of a crypto sell-off here, at least in the short term? But we'll see what happens with that, and where the US is really trying to take this.
Yeah, I think there's I'm looking at it in a couple of different ways. Like, one is it's pretty clear that the SEC is basically going after crypto at all points, right? Like, they don't want people to hold crypto. So how do you do that? You go after the exchanges, and then now they're potentially going after market makers, who are the ones driving the majority of the liquidity on these centralized exchanges. Without the exchanges and without the market makers, then you really have no way to efficiently buy crypto assets, right? So if that's the goal, then they're definitely succeeding here, as we've seen and we've covered in some of the previous episodes. We're seeing a lot of flight of capital, of companies, and everything like that out of the United States. Now, the real question here from the market maker standpoint is, are we going to see a migration of liquidity, which actually wouldn't be that bad, right? Like, if these guys just basically take their capital from market making on US exchanges and move them to offshore exchanges, but they're still providing liquidity, that actually might not have that much of an impact on price, right? Because you're still going to have volatile markets. They're just not going to be, or you're still going to have liquid markets. They're just not going to be in the US. The thing that kind of concerns me is that I believe it's Jane Street is actually considering halting crypto operations more broadly. And that wouldn't mean migration of liquidity from one exchange to another offshore exchange. That would just mean that they are just, kind of pulling back on their crypto strategy entirely. And that obviously is just less capital in the crypto ecosystem. And that's I think the biggest concern for me. Another thing to note in terms of why they might be doing this, one of the most famous employees of Jane Street history is our man Sam Bankman-Fried, who was an ex-Jane Street employee. So you don't have to look too far to see why they might be going after these guys once you know that tidbit of information. Anything else to add here, fellas? All right. Well, that kind of covers it for this week's episode. A lot going on in the institutional space, and us here at WAGME TV are going to be keeping a pulse on it for all of you listeners. So thanks very much, as always. It's been a pleasure. If you found any of this useful, make sure to like, comment, and subscribe down below. And we'll see you next week here on WAGME TV.